Hey traders, this is Ron Haight. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. All right, S&P 500, we were down today almost 1%, but the real fireworks were about 1:25 p.m. today Eastern Time. If I take you to a two-day, we'll make this a 5-minute chart. Here we were. 9:30 a.m. Eastern today, rallying, lunchtime, usual pause. Then we get to about 1:25 p.m. Eastern and the bottom falls out. They were blaming everything on Trump again. They love to do that, especially the mainstream media. Remember back over in October and November? Oh yes, awful market crashing, yep, all his fault market crashing. Then over here in May, just 3 months ago, oh yep, all crashing. Here's the thing, love him, hate him, don't really care. Capital preservation is most important, in my opinion. They're always going to have a reason for the market selling off. You can probably save yourself a lot of stress, anxiety, whatever. Put your fingers in your ear and just hum your favorite song and trade what you see and not what you think, and ignore all the crap on CNBS, etc., and mainstream media. The same reasons they're saying the market's going down now, it's back what it was before. Now it's Fed rate cuts. Now it's more tariffs. It's the same garbage that they've been spewing for how long? So here's the deal. The red line is that litmus test. We broke it. What was very interesting today, so I was chatting with a fellow trader, and we were right near the highs of the day. And I said, you know what? After such a big down day, Fed day yesterday, it's unlikely we're going to stay here. Either we're going to roll over, go right back down to the lows, or we're going to set new highs all in one day. Usually you don't get that sideways, everything's okay type of situation. And look what happened. We went right back down to the lows. So it is what it is. I mean, it was just a guess intraday. We don't know. That's why end of day price, where traders want to quote, take that position home, is so important. We all have opinions, but where did the money go? The money put it at the lows. You know, there's no, if you were hoping for a hold at the 20-day, you lost all that today. Target 50-day. That's down around 291.71, about $3 lower, but basically 1% more lower. We break the 50-day and then things get dicey. 200 days the target, just like over here. We broke it, we bounced, and boom, tagged it. We could easily break this, bounce, retest, and then go tag it. Don't know if it's going to play out the same, but the bulls do not have control of the daily trend right now, technically speaking, on the spiders. We take a look at the diamonds. They were down over 1%. They're on most of their 50-day. They tried to rally today too. Didn't work, and the selling intensified was worse than yesterday. Target 50-day, then down to the 200-day. If you want my 2 cents, again, this is an opinion. I don't see the 50-day holding. Not after a pickup in volume again today. Maybe it holds for a day or two, but this looks like it has more teeth in it. That's my 2 cents. So bears, they might be perking up a little bit, starting to get a little happy. We'll see how much fun they get. Just keep an eye on the 50-day. Here are the Qs, only down 0.5%. This one held up pretty well. It even practically held yesterday's intraday lows, but we still closed below the 20-day EMA. Target 50, then target 200. If you go to the IWM, which are your small caps, now 1.45%. They're at their 50-day. I'm going to get rid of that line. We don't need that anymore. Pretty much at their 50-day, then there's the 200, then it's back down here. We take a look at the VIX, $VIX, the volatility index, up at 17. Off the highs, though, this is continuing to break out. This is bullish VIX, bearish equities. Now, with the markets rolling over, look what gold did. As equities gapped higher, gold gapped lower, and then it reversed and it just shot higher. This could still be considered a bit of a bull flag, just like I said yesterday. It's not really broken yet. It's just a long one. We set a new high, that closing high from 7/18 2 weeks ago, 136.48, 7 more cents. We close above there. That's a breakout. Gold goes back on being bullish on the daily charts. How about the gold miners, GDX? Remember, they were down pretty good yesterday. Let's try that again. GDX, there we go. 5%. It barely got above yesterday, but that is bullish engulfing. I would also want to see them set new closing highs. Looks like 28.25. Yeah, 28.25. A close above there, 40 cents higher, then that would re-energize the bullish trend. Just some other stocks here really quickly. Square had earnings after hours, and they're what, $75 or so? $75 on Square is going to be right here. Square up. The 50 days right here, the 200 days here, that's going to be some confluence for some support. Also ties in with the swing low from the end of June. We get below 70 though, target back down to the May, June lows. How about Fitbit? It's almost like deadbit. This thing lost 21% today. If I bring you in all the data that I can show you on Thinkorswim, you're talking about going back to '09 where the close and the lows are like 165. That's still a 50% haircut. That's how ugly this thing has gotten. It ain't looking good for Fitbit. And how about Beyond Meat? Broke the 20-day. Remember I said watch that? Today it was broken. Target's going to be the 50-day. It sort of coincides with some horizontal support maybe from June or so. It's not going to be great support. The stock's only been publicly traded since May, but you got to go somewhere. Watch that 50-day below that. That's not good. Again, this is on the heels of that secondary offering where it was priced well below market value. PR plus insiders were selling. PRU is Prudential down 10%. Value of protective puts. We have blown through the reversal back in June where you had the gap down and then gap up. We're now teetering at the March lows. Pretty much, we take out those lows right around 90. The next stop technically would always be down here at 75. Not saying it's going to get there, but it is what it is. And here is Owens, Illinois, another one. It's amazing. You can have a bad report on a good day. Maybe you only lose 5–10%. You have a bad report when the market's getting taken out behind the woodshed a little bit. And this is what happens, 24% decline. If I show you a 5-year chart of Owens, we're at 5-year lows, practically. Maybe another 50 cents or so, and we're going to be there. If we break that and I show you all the data, it's like, look at that. Multiple yearly lows around this 12.5 area. If that falls, next stop could be 10, and then back down to the 2000 area pricing. Not looking good for this stock. So again, bulls do not have control of the daily charts. If you missed yesterday's video, they lost it. It continued to happen today. Target 50-day and then the 200-day. Wish you guys all the best. I'll see you in the next video.